So it's another chilly day here in South Africa, but gas is looking pretty hot, so that's encouraging. And let's have a look at what's going on. This is a quick update because I haven't done one for a while, but the market's moved a little bit. Now, since we last talked, I covered my long positions at $2.60, got out of those. I kept my long position from 251, so we're long from 251. On that reversal candle, I pointed out this pattern on the charts when this formed. This is a reversal pattern. A lot of people weren't too sure about it. But actually, if you look back on the charts over a couple of occasions, you'll see that this is actually a reversal pattern. When you have a look at it on the day chart, it's a sort of a spinning top type candle. At support, we've got the 50-day moving average and two spinning tops. Now, normally one spinning top candle is a kind of hesitation candle, but two in a row, even though we made a slightly lower low and a lower high, and a lower body, we held above the channel bottom and we held above the 50-period moving average. So on the day chart, it's actually a reversal pattern, and you can see what happened the very next day. On the 4-hour chart, it's actually a classic reversal pattern too. It's this sort of attempt higher, a collapse back down, an attempt higher, and a collapse back down, followed by this inverse hammer candle pattern. Now, hammer candle patterns, whether they're inverse or the correct way up, and hanging man candle patterns, very good, important indicators on all charts, but particularly on natural gas. You can see we moved up there. We had this big move through all these moving averages, holding above that support line, holding above the 200, breaking above the 20, breaking above the 50, and then holding above the 50. All of these candles over the last day or two have been support candles, trying to break down through that 50 period, but not getting through there, forming these wick lows. And then in the last two 4-hour candles, we've eventually broken higher. First of all, above that top, and now above this descending channel line, which is super important because now we've got an attempt at this line here, which is another key level at 268. Then we've got 274 or 75, and then we've got pretty clear space up until about 290. We may just even have another attempt at $3, getting through that gap, that little space there between $2.90 and $3, fresh air. It's clean space. There's no resistance in there. It's a gap. And once we get into that gap, if we get into it, we should fill the gap super quick. There's no liquidity there. And gaps always like to be filled on all charts. And we should see a surge up through 290 to $3. Once we get to $3, I don't know what's going to happen. I think we're going to struggle to get through $3. It's a pretty key level. It's obviously a psychological number. There was a big rejection from there last time we visited. And on the day chart, I mean, just look at that space there. There's just literally nothing above $2.90 until we get to $3. So once we get to $3, our sights are set on the next target at $3.40, 50, 60, or 75 up into this region. Actually, 350 or 60 looks more likely now because the 200-period average is moving down into that area. So that's going to form some resistance. But that sort of flesh-colored zone up there is the target. That's where we want to get. I'm not sure if we'll get through $3 though until we get towards the end of the year. But for now, let's focus on the 4-hour charts, the shorter term charts. We know that this level here at 268 is super important. Look at all these highs, all the rejections from that level on multiple occasions. But we've got some upward momentum now, having broken through that downward sloping trend line, which part of this channel. And if we can get through there, next stop 275, and then we got a little bit of resistance, not much until we get to $2.90. And then the big potential thrust up into $3, which would actually take us to the top of this longer term channel. And I wouldn't be surprised if we meet that rising top channel line at the $3 level where these two lines intersect. And roughly estimating that sort of period of time, if I look down at the bottom, that would take us to Wednesday, July the 26th, where these two lines meet. That's an important date because if we look at the NYMEX Henry Hub chart, we have a look at the day chart, and I click on this little thing down here, you can see that that date is the day before the contract rollover and the switch from the August contract into the September contract. So I expect if we do get to $3 anytime soon, that we'll meet $3 on the day or the day before the contract rollover on the 26th or the 27th of July 2023. We switch from August to September. It could be that the timing of all of this stuff comes together, the contract rollover and the meeting of this rising channel line and this top red line at $3. So it's kind of interesting really how market timing often sort of all falls together at the same time, same place, same level, and that's what we could see. So 26th, 27th, 28th of July, we might be at the top of this line here at about $3. And then we'll have to see what happens. And I think a lot of it will depend on the contract rollover. If we manage to gap through $3 and rush up higher and hold above $3, we could be into the $3.50 region sooner than we think. I think that's a little bit too hopeful though. I'm not sure if that's going to happen. I think we might reach $3 like we did last time and then gap back down again to $2.90. It's precisely what happened last time. And I think it was the day of a contract rollover. So all of that's super interesting. So we're long $2.51, current price $2.67. It's only a half size position. I took off the other half at more or less break even when we got there because I didn't want to hold too much into an uncertain market. And also we had this channel top which we had to break through and we weren't sure if we were going to get through there. We could have easily just fallen back down into the channel and back a little bit lower into further support levels beneath us, but we didn't do that. We broke out through the top. So I think we should get through 267 and probably up to 275. You can see that's a key level. If you've enjoyed this, please give the video a thumbs up and consider subscribing to the channel if you haven't done so already. Take care and good luck.